Hey traders, Raghee here, and in tonight's free video we're going to talk about gold. Now I look at gold as an extension of my overall currency approach, and we'll talk about currencies more in the premium video, but let's talk about our current open position in gold. And quite frankly, for those of you that are interested in gold, we continue to be in the range that we can find long positions at reasonable prices within. Now we are looking long in gold. And as long as we're trading within the 34 EMA on the high to the 34 EMA on the low, this is a valid long position. Now, let me talk about two ways we're actually doing this in the futures room right now. So first of all, we know the zone. The second thing is, once we know our price zone, now we want to know what kind of momentum we want to take advantage of. Now, if you're simply buying the GC, or I would also open up the idea for some of you to look at the MGC. The M just means it's micro, and it's 1/10 the size of the full-size gold contract. So let's say you want to trade a half GC, you can go with 5 MGCs, right? So it's an easy way to control risk at entry. Control risk at entry by controlling your position size. In this case, going with 5 micros or whatever number of micros you'd like versus a full-size GC contract. So if you're buying the underlying futures contract, it's really not a big deal, the momentum, because you know what your price is and you'll execute at that price. But if you're looking for GC calls, or if you're playing the GLD and you're looking for the options, in this case, you want to go long calls, the momentum matters big time. So if we look at this kind of move to the downside, but still within the range, that bearish momentum allows us to pick up those calls less expensively, which is what we did right here, this dark blue candle right there, on the momentum lower down towards the bottom half of the range. So think of the area between the high to the close as the top half, the close to the low as the bottom half. You get down to that lower half of the range with all sorts of bearish momentum, you've got a really good bearish momentum set up to pick up those, what I feel are mispriced calls in GC or the calls in GLD, okay? So that's what we're focused on. And I'm going to be pretty bullish. I mean, we are nowhere near reverting to the mean. This is the V-score down here. We're hardly even testing the +1 standard deviation. So I'm really content with where we are right now in terms of support. We're still trading within a range that I believe is supported. It's right now merely a neutral market. You can see the blue grab candles. So I think this is something that a lot of folks should keep an eye on, all right? Long gold or long gold calls. All right, so that's something we're keeping an eye on right now. We'll talk about some of the other metals in the premium video, as well as some of the currencies that we've got our eye on. And in the meanwhile, you know, be very wary right now. Again, we are shortening time frames for the most part, focusing on shorter term time frames, focusing on being very nimble in terms of day trading to control risk. And again, remember, one of the easiest places, gang, to control risk is at the entry. All right, I'll see you in the next update.